Welcome everyone to the CFO Swinger Watch Report technical analysis video for the short trading week of February 18th through 21st. Now the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you a full guidance and navigation in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. So, make sure to join us if that is something that truly aligns to your trading goals. With that, let's get into the market. So just as a reminder, we have a short trading week on our hands. We only have 4 trading days this week. Now, let's see if that is something to be concerned about or something to be excited about. So first of all, we're looking at the S&P 500 ETF or ticker symbol SPY on the weekly time frame. So as I've observed and shown you guys a couple weeks ago, we're looking at a very macro cup and handle chart pattern. And for the past 4 weeks, including last week, we have made this rounded handle or kind of a smaller micro rounded bottom for the overall macro cup and handle chart pattern. And so far, it seems like the bulls are really in control here, and it looks like it wants to officially confirm that yes, indeed, this is a very bullish chart pattern. So for this cup and handle chart pattern, we do have 2 resistances here. So first of all, we have the neckline resistance for the cup and handle chart pattern at 608.50. But with last week's new all-time high price print sitting at $610.99, so again 1 cent away from $611, we have officially a new whole number level sitting at $611. Again, we haven't really seen an official retest, or not retest, an official price print at 611, but we do have this kind of supply area that's currently hanging around here, because if we take a look at a previous all-time high price print, which is on this week's candlestick here, this weekly candlestick, the high of this weekly candlestick was at 610.78 or $610.78. So we have kind of this newly forming all-time high resistance level sitting at $611. Now, I love the fact that last week we never decided to break below the weekly 10 SMA, this red line right over here, and instead we pivoted very, very well, and we actually held over that psychological whole number level of $600. And this officially gave us a higher low compared to 2 weeks ago here, right, on this weekly candlestick. And also with this new all-time high price print, we have a higher high compared to all the previous 3 weekly candlesticks, as I'm pointing right here, right? And so this is, again, looking very, very good and looking very, very up. Now, the only thing that I'm concerned about is that, well, you guys should read the market summary as well in the report, but with all these risks that are slowly accumulating in the overall markets, there is a chance that this entire macro cup and handle chart pattern is just sucking in a lot of late buyers. And what I mean by that is, well, these buyers are the people who stood on the sidelines and let's, for example, October lows in 2022, or even October lows of 2023, because they thought that the economy was very, very bad, even though it was the exact opposite, right? The overall economy regarding inflation and the overall labor market. So all these late buyers could be sucked in during this entire time of consolidation, and I believe this entire cup and handle chart pattern has been forming for, I would say, just from my own perspective, my own subjective perspective, around 10 weeks. Okay, so you can say, maybe even 12, maybe once we began to peak out around this week, maybe this the entirety of the price basically going nowhere could have been 12 weeks, but I'm just going to focus on the actual cup and handle chart pattern that I'm seeing here. Again, very subjective perspective, but we have, I would say again, just 10 weeks, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, including last week. So this is something that you guys should be aware about from a technical perspective and technical analysis perspective, regarding the fact that with momentum slowly dying down, even if we have very increased volatility, visually, take a look at the price ranges on the weekly time frame. We have a lot of volatility going on for the past 10 weeks here, including last week. But with this volatility, we're also seeing volume dying down. So that also confirms that we're seeing momentum dying down. And also, again, momentum is dying down because of the fact that the price has consolidated, and this consolidation has resulted in this macro cup and handle chart pattern. So again, we need to look at both sides here, because again, we don't really know what's going on, what the market risks, because again, we're slowly seeing these market risks becoming, well, increasingly more riskier for the markets, and we don't know what's going to happen once we do see the amalgamation of all those risks. And obviously, again, I go into this in the market summary, so I'm not going to delve too far into the actual risks that I'm going to be talking about this week. So again, please go ahead and read the report first before you watch this technical analysis video. Right, so again, this decreasing in the weekly volume and even the average volume continues to fall. It is making me a little bit worried, especially with last week as well, since the past 3 weeks we've been stepping down, and for the past 2 weeks, including last week, we have consistently stayed with a weekly volume that is lower than the average volume line. Okay, this orange line right here. All right, so again, if we do see any type of a correction, I've mentioned this a couple of times already, I'm going to be looking for at least a revisit of the weekly 50 SMA, and if depending on what causes the markets to correct to the downside, we can actually dip below very rapidly below this weekly 50 SMA, again this dark blue line here, and dip all the way below $555 and possibly head back down to that whole number level of $540. Again, this is the level that I've been constantly talking about since last year if we do get a correction, and I really wanted everyone to focus on this level if we do get a future correction. Okay, so it's just small reminder here for you guys. Okay, with that being said, I want to take a look at the VIX. Okay, so this is the volatility index of the S&P 500. Now, heading into this short trading week, I know I've already mentioned this a couple times in the Discord chat room last week as well, but we are seeing the VIX being absolutely smashed back down for the past, I would say 3 weeks, ever since we had that big pop into late January, right? So again, I love the fact that the VIX is staying contracted. This is great news. I love the fact that the markets continue to go up higher, and I love the fact that the markets have made a new all-time high price print as well. But with this VIX being contracted lower, as we're still seeing pretty wide price ranges on a weekly basis, or even just on a monthly basis now, these contractions are just letting me remind myself that, hey, there are a lot of headlines that can really pop the VIX back up towards that value of 20, which can indicate correction in the market, right? And so we've had these consistent and constant moves back over that 20 value, or at least retesting that 20 value ever since we had that huge pop back in August, which is again when the markets had a very quick correction to the downside from the yen carryover trade, right? And with this VIX consistently hitting 20 to around 2022 ever since that large pop back in August of last year, it's making me a little bit more concerned, because the VIX hasn't been able to come back down to a more comfortable range of around 12 to around 13, right? So I would say maybe even 11 to 13, but I like to keep a very tight range here. I would say around 12 to 13 for the values on the VIX for a more comfortable range. And we have yet to see the VIX come back down and staying within that 12 to 13 range. And we did see that very, very briefly as it retested kind of that 13 value and kind of dipped below it in early December of last year. But again, that was very short-lived. So for this short trading week, I don't expect much from the VIX. We probably see another contraction in the VIX, maybe even a retest of the lows that we saw in early December here. But that, again, that could be setting up for a larger event that could cause the VIX to have a sudden pop to the upside and eventually back over this value of 20, and could indicate that overall market correction. And this should possibly line up with that overall February OPEX to March OPEX time frame or time range, or even post March OPEX as well. And again, all of this is written in the actual report in the market summary, so please read that, since I have a lot more details that I want to give to you guys about that post March OPEX and also that February OPEX to March OPEX time frame. All right, so with that being said, let's take a look at this short trading week's swing trade idea, Etsy. All right, so we are back to this COVID darling. So first of all, before I begin talking about the technical analysis for this ticker, we do have earnings on Wednesday pre-market. So take everything that I say with a grain of salt, but make sure you guys take note of all the levels that I've drawn here, and I'll be speaking about as well, because the levels will still matter even if the earnings reaction is very, very volatile, right? Or maybe it's not volatile, we'll see. But again, the levels will matter, right? So again, we do have earnings on Wednesday pre-market, so make sure you guys remember that. All right, so first of all, let's take a look at Etsy on the weekly time frame. So on the weekly time frame, this is looking like a picture perfect mean reversion trade, right? So first of all, we have, if you just take a look at my longer range or longer time frame SMAs on the weekly time frame here, the weekly 50, this dark blue line, and the weekly 200, this yellow line here, are curling down. And in fact, the weekly 50 SMA has been acting as a crux to all the bulls here that have been trying to have Etsy restart its uptrend and a potential reversal to the upside. And this has begun ever since the weekly 50 SMA caught up to the price back in November of 2022. And as the price continued to go lower with textbook lower lows and lower highs, the weekly 50 SMA just continued to act as a heavy area of SMA resistance on the weekly time frame. However, things are starting to change. There is a potential price structure change here as the overall trend has begun to, well, move sideways. We have officially stopped going lower, and this may be due to the fact that the price has come back down to the 2020 levels and also 2019 levels as well. And we have officially formed a large area of demand right at $51.50, or if you guys want a nice range, $48 to 51.50. Okay, so this is a nice little area of demand here if you guys want to have a nice visual to look at. And I would love to see the price staying over this 48 to 51.50 area of demand for now. But again, earnings can completely change that as well. Okay, so with that being said, the reason why I think there could be a potential mean reversion trade on our hands is that, well, if we are to factor out earnings, the price is now sticking very, very close to the weekly 50 SMA. And again, last week was a second retest of the weekly 50 SMA after the initial retest in the 3 weeks that we saw here back in early December and all the way up into mid-December. And that is a very, very quick move right back to retest this declining 50 SMA. But at the same time, this revisit is coming after the fact that the price has basically stopped its downtrend and it has actually begun to move sideways. And during this sideways consolidation, I don't know if you guys can see this already, we are dealing with a very nice macro inverted head and shoulders chart pattern. So I didn't draw this out for you guys before I began this video because I really wanted to show you guys this. Okay, so again, this chart pattern again is a very, very bullish chart pattern, this inverted head and shoulders chart pattern. And again, this chart pattern will really work out if we did not have earnings on Wednesday, but hopefully, depending on how earnings go, again, which is 50-50 here, right, based on how the price will react, we can have a nice big breakout, and possibly earnings could be the potential catalyst to make prices skyrocket and over the major weekly resistances and potentially restart an uptrend and have ourselves a very nice mean reversion trade on our hands. So with this inverted head and shoulders chart pattern, we have a nice neckline resistance sitting at $58. And this $58 whole number level here is also coinciding with the weekly 50 SMA. How surprising is that, right? And so hopefully we can have a very nice breakout over this neckline resistance and over this weekly 50 SMA. And whenever we do see either a break over the weekly 50 SMA or a break down below the weekly 50 SMA, we do tend to see a very large impulsive move to the upside or to the downside respectively. So again, depending on how earnings reaction is for this name, I would love to see, ideally, since we are biased to the long side and very bullish on this name, I want to see a very massive breakout over the weekly 50 SMA and over the neckline resistance level sitting at $58. Now, if we were to again factor out earnings, this would be a regular swing trade, a very simple breakout entry point over $58.10, and eventually we want to be seeing a first profit target of $61 and eventually an ideal medium time frame or midterm time frame price target of $66. Okay, so this one, again, I'm really focusing on the weekly time frame here because, again, I'm looking at this from perspective of a mean reversion trade if and only if we did not have earnings this week. Right, so again, things would be very, very nice, all sunshine and happiness if we did not have earnings. But again, maybe earnings can be a very good positive catalyst for us, and we can possibly even catch a post-earnings trade, so we can possibly get a nice earnings drift up higher and possibly meet all these price targets that I've shown you here, and also all the price targets I've also shown you guys in the report itself. So again, I've given you guys the entire top-down analysis from a fundamental and technical analysis perspectives and a 3-point game plan with the entry points, stop losses, and profit targets. And on top of that, the actual option contract that I want to be looking at this name for this week. So please read the report itself. All right, so that is it for this video. If this technical analysis video was insightful and most importantly applicable, make sure you hit that like button down below. And if you're new here and you aren't subscribed to the channel, well, make sure you guys hit that subscribe button as well. Also, if you're one of the people watching this video when it just became public and you would like to watch this video a day earlier when it's private, the only thing that you need to do is become one of the many readers of the CFO Swinger Watch Report, which will also automatically give you access to the private CFO Discord community where you can expedite and further your learning in trading. I am offering a 50% off discount code for your first 30 days, and it's a first come, first served basis. So all you need to do is DM me on Instagram at chartsfocus1 to claim your spot. Again, all you need to do is DM me on Instagram at chartsfocus1 to claim your spot. Good luck, and I'll see you all tomorrow morning.